All right, welcome. Today we're going to tackle a pretty common challenge. How do you make any sense out of the absolute flood of financial data that comes out on any given day? We're going to zero in on one specific day, January 30th, and see if we can pull a clear, simple story out of all that chaos. Let's jump in.
So, if you've ever tried to look at raw market data, this probably looks familiar. It's just a wall of numbers, right? A sea of text and percentages. You look at this and you just think, is there even a story in there, or is it all just noise? It feels impossible to spot what's actually going on.
And that's the big question, isn't it? How do we cut through all that static and find the real narrative? Well, that is exactly what we're going to do here. We're going to build a really simple framework to see the market not as a million different data points, but as one single coherent story.
So here's how we'll do it. First, we'll look at the problem, that flood of numbers. Then, we'll build a simple scorecard to make sense of it all. After that, we'll use our new tool to find the day's biggest winners and then the groups that were under pressure. And finally, we'll pull it all together for the big picture takeaway.
Okay, so let's start right at the beginning, with the problem itself. Financial reports are, designed to be dense. They're packed with information. But our goal isn't to read every single number. It's to find the meaningful signals that are hiding inside all that data.
You see, every single data point here tells a tiny piece of the story, but when you throw them all together without any kind of guide, it just becomes noise. The key isn't to find more data, it's to find the right data that tells us what really matters.
And that brings us to the solution. To find the story, we've got to simplify. We're going to take all of that complicated data and basically distill it down into one single, powerful metric that measures how each part of the market performed for the day.
And we're calling this our performance score. Basically, it's a single number that shows an industry's momentum. It's calculated from a value in the data called 3-combo. All you really need to know is this. If the score is positive, that group had a good day. If it's negative, it had a bad day. Simple as that. It's like a daily grade for every part of the market.
And just like that, look what happens. The chaos becomes this clean, easy-to-read report card. Now, instead of 100 columns, we just have one score. We can see instantly that private sector banks had a fantastic day with a score of 159. While something like large-cap software was just kind of fine. See? The story is already starting to pop out from the noise.
So, now that we have our new tool, let's get to the good stuff. Let's find out who the big winners were on January 30th, which groups had the strongest positive momentum. And here they are, our top 3 performers of the day. Coming in at number 1, we have public sector banks, followed by textiles, and then shipping. Right away, this gives us our first major clue. The market was feeling really good about finance and the movement of goods.
And let's focus on this number for a second, 1.1. That was the highest score of the day, and it came from the public sector banks. That tells you there was some serious positive energy and conviction in that part of the market.
Now, if we broaden our view just a little bit, we see some other strong performers. We've got banks, textiles, and shipping, sure, but also heavy-duty automobiles and even oil drilling services. It's a really interesting mix of sectors that came out on top. But hey, a good story needs conflict, right? For every winner, there's always someone who lagged behind. So let's flip the coin and see which groups were facing the biggest headwinds that day.
And wow, this tells a completely different tale. At the very bottom, we see some real struggles. The groups with the most negative scores were things like dyes and pigments, some diversified smaller companies, and electrodes for welding. A very different vibe from our winners.
And here it is, the lowest score of the day, negative 0.258. That belonged to the electrodes and welding equipment group, which shows that this specific industrial subgroup was really out of favor with the market on January 30th.
Looking at the broader list of laggards, you can definitely see a theme. We have a lot of weakness concentrated in very specific industrial and chemical areas. But we also see some consumer-facing groups like cigarettes and even travel agencies having a tough time. Okay, so we've seen the winners, we've seen the losers. But what happens when we put it all together? Let's zoom out one last time and see the big picture story that January 30th was really telling us.
When you put the two sides next to each other like this, the story becomes crystal clear, doesn't it? On one hand, you have real strength in the sectors that finance and move the economy, banking and transportation. On the other, you have notable pressure on groups tied to manufacturing and construction.
So if you had to boil the entire day down to just one sentence, this would be it. The market sent a pretty clear signal. It favored financial services, while showing a lot more caution when it came to industrial and manufacturing activity. That's the story we pulled from all that noise.
And that leaves us with one final, really important question. We did it. We decoded the story of a single day. But was this day just a blip, a random bit of noise, or was it the start of a bigger trend? Answering that is how you really start to understand what the market is trying to tell you. Thanks for digging into this with me.